G'day mate, Buck here, and today we are talking about the dream. The absolute dream of every Australian investor. What if you never had to work again? What if your investments paid you enough money every single month just to live your life without ever touching your principal? That is called living off dividends, mate. And today, Buck is going to show you exactly how much money you need invested in Australian shares to make that dream a reality. The numbers might surprise you. Some of them in a good way, some of them not so good. But by the end of this video, you are going to know exactly what your number is and exactly how to get there. Let's get into it.
Right. Before we get into the numbers, let me quickly explain what dividends actually are for anyone who is new to investing. When you buy shares in an Australian company or an ASX ETF, you become a part owner of that business. And when that business makes a profit, they share some of that profit with you. That payment is called a dividend. Most Australian companies pay dividends twice a year. And here is the beautiful part, mate. You do not have to do anything to receive them. You just own the shares and the money lands in your bank account, just like that. Now, in Australia, dividends come with something extra special. They are called franking credits. Because Australian companies already pay 30% company tax on their profits before paying you dividends, the ATO gives you a tax credit, meaning you could pay very little or even zero tax on your dividend income. That is one of the most powerful tax advantages available to Australian investors, mate, and most Aussies have no idea it even exists.
Now, to understand how much you need invested, you need to understand dividend yield. Dividend yield is simply how much a company or ETF pays you in dividends each year, expressed as a percentage of the share price. For example, if you invest $10,000 and receive $400 in dividends per year, your dividend yield is 4%. Simple as that, mate. Now, the ASX, the Australian share market, is actually one of the highest dividend-paying markets in the entire world. The average dividend yield on the ASX is around 4 to 5% per year. Compare that to the American S&P 500, which pays around 1.3%. Australia pays 3 to 4 times more in dividends than America, mate. That is a massive advantage for Aussie investors.
Right, mate. Here is what you have all been waiting for. The actual numbers. How much do you need invested to live off dividends in Australia? Now, first, we need to figure out how much income you actually need. Let me break this down for different lifestyles. Lifestyle number 1, the frugal life. Living simply, no frills, just the basics. You need about $35,000 per year. At a 4% dividend yield, you need $875,000 invested. That is your frugal number, mate. Lifestyle number 2, comfortable living. Average Australian lifestyle. Decent home, car, a few holidays a year. You need about $60,000 per year. At a 4% dividend yield, you need $1,500,000 invested. $1.5 million, mate.
Lifestyle number 3, living well. Good lifestyle. Nice home, overseas trips, eating out regularly. You need about $100,000 per year. At a 4% dividend yield, you need $2,500,000 invested. Lifestyle number 4, the dream life. Whatever you want, whenever you want. You need $3,750,000 invested. About $150,000 per year. At a 4% dividend yield. Now, I know what you were thinking, mate. Those numbers are massive. How is a normal Aussie ever going to get there? And that is exactly what Buck is going to show you right now. But wait, mate, before we get to the strategy, let me show you how franking credits can actually reduce the amount you need. Because of the tax benefits of franking credits, your effective dividend yield on something like VAS, the Vanguard Australian Shares ETF, is actually closer to 5 to 6% when you include the franking credits. That means instead of needing $1.5 million for $60,000 per year, with franking credits, you might only need around $1 million to $1,200,000. Franking credits are genuinely one of the most powerful wealth-building tools available to Australian investors, and most Aussies are completely ignoring them. Now, let us talk about what to actually invest in to generate dividend income in Australia. Option 1, VAS ETF, Vanguard Australian Shares ETF. Current dividend yield around 4%, plus franking, tracks the top 300 ASX companies. Super diversified, low risk, great for beginners. Option 2, A200 ETF, Beta Shares Australia 200 ETF. Similar to VAS, lowest management fee of any Australian ETF at just 0.07%. Option 3, high dividend ETFs like HVST or YMAX. These pay higher dividends, sometimes 8 to 10% yield, but they come with higher risk and lower growth. Good for income-focused investors. Option 4, individual blue chip ASX. Right, mate. So how does a normal, everyday Australian actually build up to $1 million or $1.5 million in investments? Here is the realistic roadmap. If you invest $1,000 per month into ASX ETPs and the market returns 10% per year on average, after 10 years, you will have around $200,000. After 20 years, around $700,000. After 30 years, around $2 million. $2 million, mate, from $1,000 per month. And here is the thing. You do not need to start with $1,000 per month. Start with whatever you can. 200, 300, 500. The important thing is to start and to increase your contributions as your income grows. Every time you get a pay rise, put half of that extra income straight into your investment portfolio. You won't even miss it, mate. Now, here are the mistakes Buck sees dividend investors make all the time. Mistake number 1, chasing the highest yield. If a stock is paying 10 or 12% dividend yield, something is probably wrong. High yields often mean the company's in trouble. Stick to quality, diversified options like VAS and A200. Mistake number 2, ignoring growth. If you focus only on dividends and ignore capital growth, your portfolio might not keep up with inflation. You want both dividends and growth. Mistake number 3, not reinvesting early on. In the early stages of building your portfolio, reinvest every single dividend you receive. Buy more shares. Let compounding do its thing. Only start taking the dividend income when you actually need it to live on.
Righto, mate. Here is your action plan this week. Step 1, figure out your number. How much do you need per year to live the life you want? Multiply that by 25. That is your investment target. Step 2, open a CommSec or Self-Wealth account today if you have not already. Step 3, start buying VAS and A200 for Australian dividend exposure. Step 4, set up automatic reinvestment of dividends. Step 5, be patient, mate. This is a long game, but every dollar you invest today is a dollar working for your future.
So there you have it, mate. To live off dividends in Australia, you need roughly $875,000 for a frugal lifestyle, $1.5 million for a comfortable lifestyle, $2.5 million for a great lifestyle, and nearly $4 million for the dream lifestyle. Are those numbers big? Yes, mate. Are they achievable for the average Australian who starts investing early and stays consistent? 100% yes. That is your money, mate. Make it work for you. If this video helped you, smash that like button, subscribe for more Aussie finance tips every single Tuesday, and tell me in the comments, what is your dividend income goal? Buck reads every single one. Next week, we are talking about negative gearing in Australia, explained simply. You do not want to miss it, mate. See ya.